This is our Forex video blog for December 7th. The dollar yen, the daily, weekly, monthly trends up, but the price was underneath the hourly moving average earlier today. It was also stuck between two major areas of support resistance. This fib level is likely to contain price, which it did earlier, and the lower fib level is likely to contain it. So it didn't have much of a range. Once it finally broke above the fib, that's a pretty strong sign of strength. You can also see that here. You might have got into this little sideways square slash wedge breakout, and that trade was good for about 40 pips. That's really the only trade I would have taken on this chart here. CAD yen, when the price is underneath the hourly, you want to look for sells. When it's above the hourly, you want to look for buys. The market sold off earlier, double bottomed right here, right near the fib level that would have been showing there last night, just a few measly pips away. Two of our counter trend buy signals right there with very little weakness with the double bottom. This is a very high probability trade, likely to go up here to the 20-day moving average and hourly moving average. But in this case, it shot through it, and then we have a retest here. If you weren't in the trade at the double bottom, this is a good trade. With this as your likely profit target area, I would have exited half the trade there, moved my stops underneath the low here, and every time it makes a higher high and pulls back, I typically move my stop up. And when it hits a major area like this, didn't have that much strength, great place to get out. 10-day moving average, very high probability, and you might have bought this pullback right here and got out of the trade somewhere up here with another trade. But for the most part, pretty dead today, not much statistical strength. New Zealand yen, again, sold off, hit the 50-day moving average and wasn't able to go underneath it. False breakouts are a big sign of likely to reversals, and as the market's going up right here and going sideways, you can see the longer term trends up. You buy this breakout with this as your likely profit target. If you moved your stop up underneath here, you would have kept yanking your stop up every time it makes higher highs. And our fib levels up here is very high probability place to get out of this trade. 200-day moving average and a 10-day moving average here. It was very likely to stall here. I would have probably exited the trade right here. Australian yen, very, very strong currency, and it also double bottomed last night with almost no weakness the second time, and also touched our fib level, which as of last night would have shown right here. It redraws it each day. This was our projected fib low of the day, and it touched it to the pip, and the fact that it had no weakness and the longer term trend was up, great place to get in. If you weren't in that trade, it came up to the hourly, came back down. There's major support now. Once a resistance area gets broken, it becomes support. I would have got into this breakout right here with this area up here at 82.10 to 14 as your likely profit target. Only take trades that are very likely to work in the direction of the longer term trend, and where the profit target, you know, the next resistance for buying or support for selling, is a good number of pips away. Don't buy right in front of a major sell area or sell right in front of a major buy area, because you're not going to make money doing that. Just simple as that. But in having the next resistance area up here doesn't guarantee that you'll make money on the trade, but if the trade does work, you're likely to make more, and that will increase your average wins. The key is to keep your losses as small as possible. We recommend 10 pip stops. Once the market moves 5 or 6 pips your way, you tighten your stop in half, which would be a 5 pip loss. Once the market moves 10 or 12 or 15 pips your way, you move your stop to break even. So by doing that, you know, let's say you take 10 losses over the week, and some of them, maybe 3 of them are break evens, 2 of them are half losses, and the rest are the full 10 pip losses. Well, guess what? Your average loss might be 5 or 6 pips because of all the smaller and or break even trades you took. Conversely, when you have more bigger wins like this, by only taking trades that are likely to give you 20-30 pips, you're going to have much bigger wins, and that's the math behind trading. If this had a weekly, monthly trend that was down, you might have sold this double top right here, because the first time up, it really didn't have that much strength, and the second time up, it didn't also. So double tops, when there's almost no statistical strength, are a good trade, especially if it's in the direction of the weekly trend. Here's the pound yen. Now this is one of those trades that you just have a great day on. Our software showed that this currency was down 3 days in a row, and one of our systems is up down 3 days in a row system. Because the currency was down 3 days in a row, when it breaks back above the hourly right here, you're looking to get in this trade with this as your likely profit target. And I would have got in here, out here at the fib level. That's a 50 pip move. Now, because it hit that level without that much strength, I would have got out here and missed this remaining move up. the market pulls back, and then the fib levels, once they're broken, tend to act like support like this. So you don't want to just buy. You want to make sure it's going to go up again. Wait for it to kind of run out of steam. Our IntelliTrend bars went green 20 minutes before the breakout. You buy this breakout here with your stop underneath here. And again, once you're in the trade and the market moves, 5-10 pips your way, you move your stop in half. Then break even. This was a major area of resistance. However, the market was really strong and very likely to go up today because it had been down 3 days in a row. All the time frame trends point up. You draw your fibs on this last swing, and you have your fib targets up here as excellent areas to get out, and also one of the daily fibs that I manually draw each day. So, somewhere up in here between 130, 125, and 50 is where you get out of that trade. You're long here at 130.50 for a nice 75 to 100 pip move. When the market's above the upper containment band, it's pretty risky buying. So the only time I ever do that is when the market hits this extreme level, and it didn't quite hit that today. So I wouldn't have probably bought up here. Everything was in the direction of the longer term trend though, and if you did get in that trade, it went up to our trading zone here, stalled for an hour, then hit the second one, and that was the high of the day. Euro yen, when it's above the hourly, it's more likely to go up. You might have bought this breakout of this little sideways range right here, and again, it went your way and then came back against you. Anytime that happens, I yank my stop up underneath those swing lows. Hit this level right here, it was extremely strong, and then went up a little bit more, and this is a great place to get out. 10-day moving average. You can see it made a slightly higher high with less momentum. Aggressive counter trend traders or scalpers might have gotten short here and made 20-30 pips. Monthly and weekly pivots are great support resistance, especially when you have a move up with incredible strength, a move down with even less weakness and strength. It's proving to you that it's not going down by just simply spending time above that support level. You might have went long again, drew your fibs off of this last move, and look to get out of the trade up here near the upper fib targets, which also happen to be a projected high of the day by me. I manually draw these each day off of daily charts, weekly charts, and 240-minute charts, and come up with fib targets, fib retracement levels that I think will stall the price, and today it did. Anytime those levels get hit with less than obscene strength, which is a dotted white line 20 level, is very likely to reverse. So you might have got into a short right here, lost money, got short again, made 30 pips on the counter trend, and then shorted the double top here because again, double tops with less than extreme strength usually reverse, especially when they're at or upper containment bands and a fib level, and you have a counter trend sell signal with the white dot there as well. Dollar CAD. Earlier today, this was in a downtrend. It's underneath the hourly. You might have gone short right here and had two nice trades. It double bottom right here near the low with almost no weakness. Great place to look for a counter trend trade. The hourly moving average is usually where I get out of those trades. In this case, it went up and had pretty decent momentum. You get out of half your trade there, and you keep yanking your stop up underneath each swing low. Every time it makes a higher high and has a shallow pullback, you yank your stop up there. And if you see it going up with less strength, you get out at the fib levels. Because of this extreme strength and because it broke out above the previous day's high, and you have a nice little wedge pattern right here, you might have taken this trade. It's not the best trade in the world because the likely profit target's only 10 or 15 pips away. If I take trades like that, I'm usually quick to get out of the whole thing. I would have missed this remaining 10 pip move up. Dollar Swiss, earlier last night, underneath the hourly, you're looking for sells. Pretty decent weakness here, hits the lower containment band, rallies up. It's always good to look for pullback trades when the trend's down, and it went down with a lot of momentum again. You might have gone short right here and you probably would have lost on that trade. And then again, this is a perfect example of a double bottom with divergence. It had a lot of weakness here and less than half the weakness the second time, and it's a great place to get into a trade. This is a profit target. It went sideways. I would have got out of half my trade here at the 50-day moving average, and then just yank my stop up underneath each. Every time it made a higher high and had a little pullback, I'm yanking my stop up. And if you see it going up with very little momentum, more than likely I would have got out here with this counter trend sell signal. I probably would have missed this remaining 40 pip move in all honesty. Pound dollar. This one, was kind of going up today earlier, but it didn't have that much momentum. It also had this fib level, which was likely to be the high. It only went slightly above that, which happens occasionally. And you also have major resistance up there. So it's kind of stuck between all those areas of selling and buying. I would have avoided this one like the plague today. I don't like currencies that don't have the next level a decent number of pips away. Then it makes it worth taking the risk. When you're not likely to make more than 5 or 10 or 15 pips, there's no reason to take a risk on that trade. The euro dollar, when it's above the hourly, you might have bought this little wedge pattern last night, especially since our IntelliTrend bars were green 20 minutes beforehand. That always adds to your probability. And notice once you got into that trade, the bars got super dark green, which means the euro is one of the strongest pairs and dollar is one of the weakest. Shoots up about 50 pips. Didn't have off the charts momentum on the way up, and so you might have, as this thing went sideways and double topped right here, you might have gone short right there because there was no strength for a quick pullback. Normally it comes down to the hourly. In this case it didn't, which is a sign of its strength. And you might have went long again right here after a double bottom here at the low, but this is your likely profit target. Extreme strength, so you're looking for a pullback. You go long again right here, you draw your fibs on this last wave up, and it didn't quite hit the fib level, came a pip or two away from it. Trend reversal signal right near the upper containment band with a little bit less momentum than before. I would have got out of the trade there. I'm not so sure I would have bought this next pullback because the weakness is almost as much as the strength on the way up. But when it double topped up here with less strength, you can see it's going up and then double topping with less strength. Good place to go short. This was your first profit target. Shot through that. This was your second profit target. Anytime fib levels get broken, it usually is a big sign. When it broke out above it, it had a continuation here, and when it broke underneath it, it was a big sign that traders weren't buying at an area that they normally do, so it's likely to go the other way. It's that simple.